When you think of McDonald's, obviously everyone's thinking drive-through, and then you think quarantine. You would think this would all be good news for McDonald's, but it hasn't really performed as well as you might think.
Right, because it seems like the big problem there is one word you forgot, which is delivery. I mean, Oliver Rennick just spoke with Chipotle's CFO on Morning Trade Live this morning, and he mentioned how delivery has been kind of the biggest savior for Chipotle during these stay-at-home orders. Now, when you look at, of course, a competitor like a Domino's Pizza, Chipotle, that really have this app-driven delivery, McDonald's is a complete laggard in that space because it seems like to pay for these ridiculous markups you do when you buy from Uber Eats or Grubhub, you pay these fees for delivery. It's a little ridiculous when you're buying, say, a $1 hamburger. So delivery isn't exactly McDonald's sweet spot, which I think has been a really big problem for them. As you can see, they've kind of lagged this broader market recovery. However, it's not all doom and gloom going into this earnings report. They do have some positive things going on, at least for the long term. So they're working on becoming a heavier franchise restaurant. They're working to become a 95% franchise entity. Now, this is really important because they have roughly 40,000 restaurants worldwide. So this is a ton of real estate when you think about it, which is just fascinating. Another thing is a recent Goldman Sachs survey showed that people are becoming more comfortable eating out, with 31% saying they were increasing their carryout orders, which is up 6% from March. Another thing is many consumers are getting sick of cooking from home, with just 54% saying that they are cooking more at home, which is down from 64% in late June. I mean, myself included, because I just think people need to get out of their houses. Now, if Kevin Hanks were here, another thing he'd love about McDonald's is they do pay a 2.5% dividend. So I had to mention that, even though he's not here today, of course. Now, the sentiment on social media is super positive because similar to a Coke or, some of these legacy names, McDonald's really is that. So people are really big still believers in McDonald's, despite the fact that we've seen this healthy push. People do love their McDonald's. So our first tweet says, McDonald's will take off tomorrow. I'm betting on a win for earnings also. Now, kind of sticking with this similar bullish sentiment I saw on social media, our next tweeter says, we stop at McDonald's at least once a week. Given the quality, price, and deals and McCafe rewards in the app, I always feel like I'm getting a good deal and want to come back. Wendy's and Tim Hortons feel more expensive and are much lower in quality. Now, I compared, of course, McDonald's to, say, Chipotle and Domino's Pizza, which previously had earnings, but they are much closely related to a Wendy's or Tim Hortons because at the end of the day, they are fast food. Now, of course, it seems like the obvious answer for McDonald's recovery would be people getting more comfortable going to restaurants, things continuing to open. But Tom, what could be another factor that could possibly drive a recovery in this name long term?
Well, I think the biggest thing that you're going to probably have to take a look at is how they're doing with their drive-throughs. Remember, they're not opening their restaurants, right? They're having to pull back on their reopening plans. That's a detriment to them. If you look at the estimates going into this earnings, I think they're supposed to get report like 75 cents a share. That's down 63% year over year. But if you take a look at the stock price compared to what we're seeing in a deterioration of earnings, I know estimates are lowered, but it just seems odd to me that McDonald's stock price has risen this much. But I think it's all going to be about guidance, how they're doing with delivery, and then the drive-through business, because that's what people do. And the people that are eating McDonald's once a week, my heart just hurts right now just thinking about that. But I think it's going to be, how much their sales have deteriorated, and if they saw a big rebound after May's or April's dismal numbers into May and June.
Yeah, no, good point, Tom. Jenny, we got to go. We appreciate it. Jenny Horn, contributor across the TD Ameritrade Network, joining us. So say goodbye to Jenny. We want to welcome in Andy Swan, the co-founder of LikeFolio.com, to join the conversation here. Andy, McDonald's is a powerful, powerful brand, but has the brand been powerful enough to kind of help weather this storm where, there's been an extreme focus on health and safety? And McDonald's, for better or worse, the brand isn't necessarily the most healthy one on the planet, to Tom's point.
Yeah, I don't know how much of a factor that is. I think that the bigger factor is that people aren't going to work, people aren't going taking their kids to activities. There's no stopping by McDonald's on the way home or on the way to work anymore, and that's a huge deal for this company. At the beginning of the quarantine, when we looked at mentions of people ordering digitally for McDonald's, what we saw was a massive spike at the beginning of the COVID quarantines and lockdowns that held pretty well for the course of a month or so, but we've seen a really steady decline and decrease, almost back to normal. Not quite there, but definitely well off the highs that they saw, and I'm sure they would have liked to expand on. So this is not a Chipotle type of story. This is people who experimented early on with digital ordering of McDonald's and just really weren't that impressed that they continued to do so. And so for us, I expect this to be a soft quarter. They've kind of tipped their hand already. They've released monthly sales numbers. It looks like as of a month ago, they were 12% down in terms of year over year sales, which is a really big number. They've been same store sales growth very consistently up until the first quarter of 2020. And so I think this is going to be a tough quarter for them. I think investors are kind of tired of the excuses in terms of quarantines and lockdowns. There's a feeling of, well, is this the new normal? And if so, who's winning? Clearly, that's a tough road for McDonald's because there's a lot of competition on these DoorDash and Uber Eats apps that quite frankly, might be more appealing to people than McDonald's, which a lot of times was the choice out of convenience. And when you're not out and about like you were last summer, that convenience trip just isn't happening, and so no one's going through the drive-through, at least like they were a year ago.
Yeah, you make a good point there, Andy, and especially because of that, the importance of breakfast for McDonald's, right? The selling the coffee, that's a high margin business for them. It provides a lot of revenue for them. Nobody's going, through the drive-through on the way to work or on the way to school or after their kids' activities. Are you guys seeing that in your purchase intent? As far as that's going to be a detriment to this company, and maybe it's not going to turn around anytime soon as a pandemic continues to spread.
Yeah, I think that the worst news for McDonald's right now would be school closing, schools going online in early fall. I think that throws the entire family dynamic out of whack. There's a lot of people that would, drop their kids off at school, go into the office, pick up McDonald's breakfast sandwich or coffee on the way. That's just not happening. We see purchase intent mentions gradually sliding lower as the stock has moved up. I think that McDonald's is going to have a tough time being optimistic looking forward on this call, especially with those digital mentions. From our data's perspective, we see the digital mentions down. We see digital down. We see breakfast down. Those were two areas of concern, and I think it's just going to be tough for them to put really a rosy outlook on the next 90 days on this call.
Andy, what I'm hearing is that there's two particular, and there may be more, but two particular themes here that are both negatively impacting McDonald's. The first one is kind of this Starbucks effect, if you will, which is routines are completely destroyed. So many more people are just going to make their coffee at home now. They're not going to go to Starbucks. They're not going to go to McDonald's because they're not leaving their home. They're working from home. Second is much more of food is being delivered. And if things are being delivered, that levels the playing field for McDonald's versus competition. Where McDonald's was efficient, it was quick, and it was, you just drive up to it. Well, if you're getting it delivered, now, a little bit higher quality burger, something like, an Au Cheval in Chicago, maybe just sounds a little bit more appealing if they're both going to be delivered. You don't have to go anywhere.
Yeah, I think that's exactly right. Those are the two themes that we're seeing breakfast completely disrupted through routines, and the idea of delivery just isn't favorable to McDonald's. Like you said, I mean, you can get Shake Shack, you can get Five Guys, you can get a lot of things if you're wanting a burger and fries that aren't necessarily McDonald's. The reason that you stopped at McDonald's was because it was quick, it was consistent, and it was cheap. None of those things are really a factor when you're talking about delivery. And it's going to take 25 minutes for it to get to your house no matter what. With the delivery fees, everything costs reasonably about the same. And from a quality perspective, you've got better options. So I think that's tough for McDonald's. I think it's one of these, kind of great iconic brands that absolutely will be back. I thought Jenny's point about moving to a franchise model will be beneficial to them going forward. So this is one that it's like, I want to look at this when the stock is down and being hit hard, not when it's, rallied for the last couple of months and up against some serious headwinds.
Tom, when I think of McDonald's, one thing that always comes to mind, the same as Starbucks, is scale. And to Andy's point, powerful brand, but also a huge footprint. We heard from the CFO of Chipotle on MTL this morning with Oliver, and one of the things that they've been able to do is kind of this idea of this digital kitchen and a leaner workforce for these delivery orders. Well, McDonald's is efficient as it comes, and when it comes to making food and preparing it. And so these are all things that I would say McDonald's is probably set up for well. They have plenty of locations, plenty of footprint, and efficient, let's say, process of making the food. But the stock's kind of gone nowhere year to date. We talked about these headwinds from Andy's points. It kind of seems like it's very reliant on the macro kind of situation, which we don't know where that's going to go.
Yeah, and to Andy and LikeFolio's data there, if you're looking at their digital mentions, 7-day moving average, moving down as the stock continues to trade it back above $200 a share. It's only about $11 off its all-time high. So the way that I look at this is, if you start looking at the data there, maybe people are ordering out, right? But now you've got more selections, and reopenings have been taking place. So maybe you're going to that other place down the street from you. But if you take a look at maybe the same store sales look moving forward, I think that's going to be key. What they say, we know it all bottomed out in April. It improved in May. How much did it improve in June? And I think that's going to be the key. Revenues are expected to be down about 32% from a year ago quarter, which is expected. But like I said before, if you look at the stock price, not only just in general, but then compared to what Andy has on LikeFolio, and then you're starting to see some of that sentiment drop off. That's a concern in the near term. But like Andy said, this is an iconic brand. It'll be back. But if these lockdowns and shutdowns continue to get extended and people aren't going back to work, Google just announced everybody can stay home till next July. If that continues across the board in different industries, and you're not doing that routine where you're going through the McDonald's drive-through a couple times a week, that's a big concern, because I think expectations were that we were going to start picking up on the reopenings a lot quicker than is taking place.
Andy, I'll let you kind of give us your final thoughts here, but to set it up, could an argument be made based off of your data and the performance of some of McDonald's peers that it's actually kind of maybe overvalued, even though it's just flat? If you look at Starbucks, down almost 15%, Shake Shack, another one that you mentioned, year to date down 18%, or for other reasons, is McDonald's, lean process able to kind of just keep it afloat?
Yeah, I think I kind of think both are right. I think that this is a stock, I feel like it's going to be tough for them to really. I think that the risk is definitely to the downside in terms of our analysis of the data going into this earnings call. I kind of think of McDonald's as a proxy on how investors feel about the possibility of reopenings, more so than on the company itself. I do think that they have the opportunity to get some margins going a little higher. They've got some profitability. Dividends are nice. So they've got a lot of things going for them. I just think that going into this earnings call, they've really got a lot of headwinds. That it's going to be tough for them to be optimistic on that call. And it'll be tough, I think, for McDonald's to get a real boost over 200 from here. So if you want to play a fade, you might play a fade. But for me, it's more just let's wait and see if we can get some prices down near those spring lows. I don't think we'll ever get back to that level anytime soon, but you never know. And this is one of those companies that you could have on a watch list that just says anytime it moves down 10, 20% in a matter of weeks, you've got to take a look.